If you've been watching your portfolio pump this month, you'd be forgiven for getting a little bit optimistic about 2023. But make no mistake, for crypto prices, this year still promises some big swings. After a punishing 2022, crypto prices actually have had a decent start to the year. After beginning the year close to $16,500 Bitcoin gained over 25%, heading above the 21k mark by January the 16th. Ether has been performing even better, gaining around 30% over the same time frame. But both have since fallen back slightly, so what's going on and where exactly are crypto prices headed next? Well, first off, concerns over the state of the US economy reared their ugly head again. Recession worries have come back into focus, just as data showed that US retail sales fell 1.1% in December. That matches the largest drop in a year. Add to that, the Fed's James Bullard has said that the pace of raising interest rates should not be slowed until they're over 5%. Both US equity markets and crypto headed down as a result of all of that. Crypto then took another hit after the ominous announcement that the US would be taking, quote, a major international currency enforcement action. Now, this turned out to be the arrest of the Russian owner of little-known Hong Kong registered crypto exchange Bitzlato, and you'd be forgiven for not having a clue what exactly that is. Even Ripple General Counsel Stuart Alderoty tweeted that he'd never heard of it. However, he also added that prosecuting those who exploit the crypto system is good policy. Now, despite the underwhelming nature of the action, crypto prices have failed to recover since then, and Lennox Lai of OKX told us that for the moment the economic outlook remains the key factor.
I think inevitably, macro factor is still one of the major determination factors on crypto. At least for at least a majority part. Because crypto is still very highly dependent at the same time, highly dependent on the monetary story. The monetary supplies do affect the risky asset, the appetite of the risky asset, which is on crypto right now. And also, there's a lot of that we don't have a lot of catalysts. I mean, the crypto only catalysts that will further drive the correlation out of the macroeconomics.
The crypto industry is also still struggling to readjust following last year's turmoil. According to Bloomberg, brokerage firm Genesis Capital is preparing to file for bankruptcy. The Financial Times has recently reported that the Digital Currency Group subsidiary owes creditors more than $3 billion. And according to the South China Morning Post, Hong Kong-founded Amber Group is scrambling to cut costs too. That includes cutting staff numbers in the city by half. But will such consolidation in the space ultimately help crypto prices longer term?
The market is pricing as whether or not there will be another round of liquidations or another round of whether or not there would be a chance that the massive holdings of either ethereum or Bitcoin that are going to be liquidated, that's forcefully. The good news is the market think, at least the marketing or the industry think, the worst scenario is already gone. So even Genesis or plus DCG or related group, they would yes, they are in trouble, but at least they are sovereign in certain definition of accounting.
Rebuilding trust is, of course, also key for a return to market upside, and there has been many calls for clearer guidance from regulators. The latest came from Caroline Pham, Commissioner of the US Commodities Futures Trading Commission. She urged regulators to think proactively and told Bloomberg that clearer regulation and public meetings may have been able to prevent last year's crypto meltdown. She also said that crypto financial instruments need to be held to the same regulatory standards as traditional ones. And Lennox Lai agrees, saying exchanges need to be playing their part in all of this as well.
I think we would substantially invest on the compliance team, and compliance and licensing is become tier one priority for an OKX as a loan, because of a very simple reason. Because I think the market needs transparency, the market needs governance, the market needs the exchange to be regulated, and the final fact is the regulation is getting a lot more ready. I mean, in global scale.
As for market catalysts on the near horizon, Lennox is keeping his eye on Ethereum's Shanghai upgrade. Do check out our recent show explaining exactly what that is and what the expected upsides are. That upgrade, of course, is expected in March.
I think we can see definitely capital going in for crypto. We can see open interest related on option on Ethereum and Bitcoin are all related to call option. So people tends to be, the put call ratio will tend to be more bullish just from this perspective. So people are actually speculating, at least speculating for the very first half of the year. Bitcoin price, I mean crypto market as a whole have a really high probability that is going to be performed better than last year, and a lot better.
Alright, that's it from us. Do like this video and subscribe to our content if you want to see more like it, and let us know what your thoughts are about price action for this year and anything else in the comments below or wherever you're watching this video.